Well, good morning and welcome to our webinar. Today we will be explaining to you how you can access the COVID-19 stimulus package put out by the federal and the state government, and we'll give you plenty of opportunity to ask questions, and we know that you certainly have plenty of questions. I think we all do at the minute. My name is Jenny Wilcock and I'm a director at Sullivan Dewing, Chartered Accountants and Business Builders based in Caringbah, for those of you that don't know me. This is our first ever webinar, so be gentle with me. Be nice if we have any teething problems. Certainly at the minute we're in a difficult time for all businesses and all individuals, and we know there are many concerns out there. We do have help available, we just need to know how to access that help and how it's going to apply to our individual businesses. We're here certainly to help you through this process. There's a lot of people that are wanting responses to questions for help straight away. I do want to say to you that we do have a little bit of time to work out what we need to do and to work out the best way for you to access that help. Now shortly I'm going to share our presentation with you, and as I do that, any questions that you have, if I could encourage you to post those throughout the webinar, and then we will answer them all together at the end of the webinar. So you'll use the webinar chat box to do that. So just to let you know as well, you guys are all on mute, so you can hear me, but I can't hear you. So you can say whatever you like in the background. All right, let's get to it. Okay, so I'm hoping that you can now see our PowerPoint presentation, and this is what we will be running through with you today. So we'll be looking at the stimulus packages and going through how they are going to apply to your business, and we have a couple of examples here that I'm sure you will be able to relate to. So what we'll be looking at today, we'll be looking at what the government is providing as far as assistance for keeping people in jobs. We'll be having a look at the regulatory protection and some financial support for businesses. The ATO's come out and said that they will help businesses. We'll go through their measures. We'll have a look also at the support that's available for workers and households. We'll spend a little bit of time on the state government support, and then we'll go to our questions. Okay, so looking at the packages for keeping people in jobs. So what the federal government has done, so they've come out with one stimulus package first and then a second stimulus package. Now, where we're up to at the minute is the federal government is allowing up to $100,000 to businesses with a minimum payment of $20,000 to eligible businesses. Now, an eligible business is a business with a turnover of less than $50 million and one that employs people. So you have to be registered for pay-as-you-go withholding at the ATO, and you needed to have been registered by the 12th of March for pay-as-you-go withholding to qualify for that. Now, what's important to note here, and this is the big kicker in this help package, is this money is not direct money that will go to businesses and to their bank accounts. This money is a credit to your integrated client account at the ATO. So, point 3 there, employers will receive a credit for up to 100% of the tax withheld on their wages. And the maximum, initially they had announced that this credit would be $25,000. That's now been increased to $50,000 before June 30, and then $50,000 after June 30. Now, what the government has said is when you are a business and you don't have a lot in pay-as-you-go withholding, so there's not a lot of tax on employees' wages, they will pay a minimum of $10,000 before June 30 and then another $10,000 after June 30. They increase that from $2,000. So important to note as well that these payments, when they come into your business, even though they're not hitting your business bank account, they're still accounted for in your business. The payments come in tax-free, which is fabulous. So what happens is that the payments will flow through the BAS lodgement system. When you lodge a BAS, that's what will trigger the credit to go to your account, and that credit will offset the amount that you pay to the ATO for your BAS. Now, if you have a credit remaining, for the remote possibility that you have a credit remaining, that can actually be applied to be refunded to your business. It's unlikely that many people are going to have a credit remaining there. So what happens is, up until June 30, there's access to payments of up to $50,000 for the larger businesses and $10,000 for the smaller payers. And whatever the government has paid to you before June 30 is what they will also pay to you after June 30. So after June 30, let's say you had received $50,000 before June 30, you will then receive 4 equal instalments between July and October, again of the $50,000. So $12,500 times 4. So that second lot of payments is also credited to your integrated client account at the ATO and not paid directly to you. So there's no direct cash payment to business in this stimulus package. So let's go through an example here. So we have a company that lodges or any entity that lodges a monthly instalment activity statement. So I've called it a stage 1 payment, which is up to the first 50, and then a stage 2 payment, the second 50. So let's say you normally lodge your monthly instalment activity statement and you have a $15,000 amount owing for pay-as-you-go withholding. It's your March 2020 BAS. So what the ATO is doing, the way they're calculating this, is they times that $15,000 by 3, and they credit your integrated client account with $45,000 in April. Now they're saying from the 28th of April, that's the lodgement date of the March BAS. So it will be very interesting to see how these accounts actually look once they start processing these credits. So you've lodged your March BAS, you've now had a $45,000 credit hit your integrated client account, and that then goes to pay the rest of that BAS, and that will also go to pay any other ATO debts that you have sitting there. So March is done and lodged, you've got your 45K credit, so then you lodge your April instalment activity statement in May, and that's also got $15,000 in pay-as-you-go withholding on it. So the ATO will then credit you another $5,000 to make you up to that $50,000 balance. Okay, so that's stage 1 payment for a monthly lodger. Stage 2 payment, you'll receive then 4 payments of the amount that you've already received. So if you receive the 50, you'll now get $12,500 in July, August, September and October, making the second 50 and the $100,000 in total. So let's have a look now at a quarterly BAS lodger. So stage 1 and stage 2 again. So stage 1, so you lodge a BAS quarterly, and on your March 2020 BAS, you have $4,000 in pay-as-you-go withholding. So what the ATO does is they look at that 4 and they say, well, we will pay you the minimum amount of $10,000. They don't times that payment by 3 because you're a quarterly lodger. So they'll pay you $10,000 in April, and you'll lodge then your June BAS. You'll have another $4,000 in pay-as-you-go withholding. There is no second payment then because you've had the maximum for a small pay-as-you-go withholding payer. So you've had $10,000 for that period up to June 30. That $10,000 gets credited to your integrated client account, as it does for the monthly lodger, and that goes to offset the amount that you owe to the ATO. So in theory, if your BAS for March had $4,000 in pay-as-you-go and $6,000 in GST, your credit of $10,000 would cover the full payment of that BAS. So this is where the ATO is trying to help. They're trying to ensure that you are receiving money that you then don't have to pay to the government and can use that money that you would have paid on your BAS for your normal business expenses. Stage 2 for the quarterly lodgers, you'll then receive the same 4 payments, July, August, September and October of $2,500, and that will be the other $10,000 for you, making the $20,000 in total. Okay, so where's the opportunity in this for us? And we have to be mindful of a few things when we look at these opportunities. We have to be mindful of the ATO's position on people orchestrating arrangements to magnify these payments. We need to do what we would normally be doing in our business. So, as I mentioned earlier, to access any of this stimulus package, you must have been registered for pay-as-you-go withholding by 12th of March 2020. If in fact you were registered but you're paying no wages or there's no tax on the wages that you're paying, you are still eligible to receive 2 times that $10,000 payment. So when we're thinking about it, what is important when we are looking at the amounts that we are paying on our BASs is if we were able to increase our March pay-as-you-go withholding, that would enable your first credit to be a higher amount, which may help you at this time. So one thing we could consider, if you normally pay 30 June bonuses to yourself or to your employees, you might consider paying those as 31 March bonuses, which would increase your pay-as-you-go withholding and increase your first credit. We might look at our director remuneration packages and make sure we're paying our directors market salaries, not reduced salaries. And we might look at the way that we take dividends out of our businesses instead of wages, and look at paying wages as opposed to dividends. Now, there's a few other things, tax planning, things that we need to consider with those situations. Consider additional workers' comp that you might have to pay. And also, if we modify dividends to become wages, then we know that that's taxable income to individuals without that franking credit that comes with the dividend. So things to be considered. So every single business and every single director and shareholder's position is different, and we will look at this for each and every one of you. Right now you need to know the basics, and then we'll come back to you with finite details for your individual business. Give us a week or so though, it's pretty busy at the moment, I'm sure you can imagine. Okay, so let's have a little bit of a look at the regulatory protection that the government has put in place. So also access to some additional working capital. Now, of course, the banks and the finance brokers at the minute are absolutely inundated with calls in relation to this $250,000 loan that they're proposing to give to small businesses. So what the government has said is that they will guarantee 50% of the loan amount. Now that guarantee though, that goes to the bank, to the lender. It doesn't go to you as the borrower. But what they're trying to do is encourage the banks to lend unsecured finance to businesses, lends that they wouldn't normally do. Now, it will be very interesting to see how these loans actually get through the bank's credit departments and which they will approve and which they won't. So, yeah, more detail yet to come out, I'm sure. Now, what we do know is that the banks haven't released any detail on this. They, in fact, don't have a lot of detail on this. This was released basically on Sunday by the government, and they're just scrambling and trying to work out exactly what they can do and how they package this up and how they get this out to people. So these loans are due to commence from April and available until 30 September. So this is a big part of the stimulus package, and I just hope that the banks follow the tone of the government and enable these funds to be available to small business. So you do need to be speaking to your bank or your finance broker and just letting them know that you do want to access this money so that they can be basically putting you in the queue to get back to you when they are able to. So the regulatory shield that the government has put in place, and this one actually may well prove to be quite helpful. So the government has said that they will become the regulatory shield for businesses for the next 6 months. They have increased the creditor's statutory demand threshold from 2K to 20K. So that means if you haven't paid your creditors, or a creditor, and you owe them $18,000, basically they can't bankrupt you because it's under that $20,000 threshold. So that's a fairly substantial and reasonable increase there to protect our businesses. They're also giving you now 6 months to respond to bankruptcy notices. That used to be 21 days. So a little bit more time there too, which will be helpful. And they have increased the level of bankruptcy from a 5K debt essentially to a 20K debt. And the other thing that is very important for our directors of our trading businesses is directors are currently personally liable for government payments that their company hasn't paid in the form of GST, super and pay-as-you-go withholding. So there is now 6-month release on that personal liability if your businesses can't pay their GST, their super and their pay-as-you-go withholding. So that is particularly advantageous for us right now. Okay, so the second part of the stimulus package is all about the instant asset write-off and what we can do with assets and what additional tax deductions we will receive. Now, this is an interesting angle, and I have had a number of conversations with clients about what they can buy and how that can impact their business. And one of the things that I'm having many conversations about is if you've got any assets at the minute that you can sell to free up some cash flow for your business, and then if you're purchasing another asset and you're financing that asset fully, then that's the way to get a little bit of a cash injection into your business. Just be mindful when you do sell any sort of asset that your company or your business owns, the amount that you receive is inclusive of GST. So if you sell a vehicle and you get $22,000, $2,000 of that is GST that goes to the ATO. So the change in the measures that they have announced is that you can purchase an asset up to $150,000. A little bit of a tweak here is just make sure that asset is $149,999 because they do say up to $150,000. This applies to businesses with turnovers less than 500 mil, so that has been expanded dramatically from the 10 mil threshold that we currently had. Now, that is effective for assets purchased between the periods of 12 March and 30 June this year. So you have to have it purchased and installed ready for use by 30 June this year. That applies to new and second-hand assets, and they can be purchased outright or financed. Certainly at the minute you would be thinking twice about spending any of your business cash on assets outright. Certainly the time to be preserving cash. Something to remember as well, if you buy a motor vehicle that costs more than $57,581, you will only get an immediate tax deduction up to that value, but also up to the business use percent. So if you buy a vehicle and you only use that 50% for business, then you will only get 50% of its value deducted, up to $57,000. Now, very important to note as well, if you were thinking about buying any assets and you didn't purchase them by June 30, from 1 July, this instant asset deduction drops to $1,000 and to less than 10 mil business turnover. So big change. Before June 30, you get deductions up to $150K. After June 30, the deduction drops to $1,000. Now, we had expected in our usual May budget for this to be amended, but the budget has now been pushed back to October. So from 1 July, as I said, that deduction drops to $1,000. The second arm of our asset deductions is 50% depreciation, accelerated depreciation for assets purchased for businesses with turnovers less than 500 mil again. Also effective from 12 March up until 30 June 21. So an extra 12 months then on top of the 150K goes to 30 June 20. The 50% write-off goes to 30 June 21. Now, this concession only applies to new assets. It doesn't apply to second-hand assets at all. These assets can be financed or purchased outright. Now, the remaining 50% goes into an asset pool, and that's then depreciated at 15%. So some substantial tax deductions for us. Now, it'll be very interesting to see how many businesses need a lot of tax deductions in this environment, but they are the measures that have been announced. Something that will certainly help our businesses that employ trainees and apprentices. There is a wage subsidy of up to $21,000. This is per employee, $7,000 a quarter. And this is for wages paid between 1 January 20 and 30 September 20. This applies to employers of any size. The apprentice must have been in training by 1 March 20. So it will be for existing apprentices, existing trainees. The applications for this money start early April and the applications don't close actually until 31 December this year. So there's a bit of time to apply for this money, and you need to be approved by your AASN provider to access these funds. There will be more detail coming out on this measure. There's not a lot of detail on this one just yet. Some extra support as well for our regional communities and also for our very troubled aviation industry. So what is the ATO doing to help us with our businesses and the amounts of money that we owe to them? The question on everyone's lips. So what the ATO has said is that they will approve the deferring of tax payments for 6 months from the payment due date. Now that includes income tax payments, that includes fringe benefits tax, that includes taxes on your BASs, excise tax as well. It's not an automatic deferral. We have to call the ATO in every single case to request this deferral and give the ATO the reason. They won't automatically say, yes, you can have it. Now, we did spend some time on the phone yesterday to the ATO and you know, sometimes, as we know, it depends on who you get when you call, and we had one instance where it was a troubled conversation and one instance where it was a very positive conversation. So if your business needs a tax deferral, then that is a phone call that we need to make to try and put that in place for you. So another of the ATO concessions is that if your business is on a quarterly GST cycle, you can change that to be monthly GST. And what they're envisaging is that you may be able to receive GST refunds if your expenses are more than your income. And they're suggesting that if you want to switch over to monthly, you can get those refunds more quickly. If you do want to do that, let us know. That's something that we can apply for on your behalf. Now, the next 2 points are actually quite important points. So the ATO usually doesn't allow us much leeway to alter the tax instalments that they issue to businesses. But what they are allowing at the minute is that the income tax instalments for companies that are appearing on the March BASs, they will let us vary those to nil for March and June, and they will also let us claim back the instalments, the company tax instalments that you had paid on your September and December BASs, and that would put another credit to your integrated client account at the ATO. Now, what we also have to very much be mindful of, if we do that, then by the time we lodge your tax return for this financial year, if there is tax to pay, you will not have paid any instalments towards that, and you may have to find a reasonable amount of money come the lodgement date of this current year's tax return. So that is something, again, we will look at on a case-by-case basis. So anyone that we do not lodge BASs for, and most of you lodged your BASs yourself, full credit to you, that's fantastic. I want you to be speaking to us before you lodge your March BAS so that we can make these adjustments in that lodgement. That is the time to be doing it, is on the March BAS. Now, a lot of we use these company tax instalments to frank the dividends that we pay out to our shareholders of our trading businesses, and we may need to keep some of those tax instalments there because we might need them to attach to those dividends as franking credits. But we will speak to you on an individual basis and let you know what you need to do. The last 2 measures that the ATO has agreed to is that they will wipe interest and penalties that were incurred after 23 January that have been applied to any outstanding liabilities. So that's something for us. And they're also suggesting that they will put in place low interest payment plans. So I haven't seen a lot of detail on how low the interest is or what they plan on doing there. But they certainly are open to renegotiating existing payment arrangements and also to negotiating payment arrangements for current BASs that are being lodged. So talk to us. The ATO, I believe, will come to the party. We just need to make sure that they do. Okay, having a look at what is going out to workers and to households. So people that are already receiving income amounts via the job seeker payment, the youth allowance, the parenting payment, farm household allowance, any other special benefits, they will receive an additional $550 per fortnight paid to them, and that will apply from 27 April for 6 months. So they currently get their allowance from the government. They will get this $550 on top of that allowance. Anybody that now needs to apply for a job seeker payment, for instance, if you've lost your job or one of your family members has lost your job or you've had to put off employees, they need to apply through Centrelink. We've all seen the Centrelink queues. We've all seen the MyGov websites crashing. So I guess we just need to keep going and apply as those sites become available. So sole traders are an area that is not greatly able to access some of these concessions if they don't have employees. What the government has announced, though, is where you are a sole trader or a casual worker and you are making less than $1,075 a fortnight, so about $28,000 per annum, you can receive the full additional supplement of $550 a fortnight. You need to apply through Centrelink, and that additional payment goes for 6 months, basically from 27 April. So sole traders need to be having a look at what they're making to see whether they can access that additional payment. Households will receive, if they are receiving a government support payment, they will receive a two $750 stimulus payments, a first and then a second, and they go to Social Security recipients and Veteran Income Support recipients, and also to eligible concession card holders. So we have a lot of self-funded retirees that are not pensioners but may have a concession card, and they will get access to this $750. First payment's from 31 March, second payment from 13 July. Okay, early release of super. Now this is a fairly interesting and possibly contentious concession that they've put in place. So there are some individuals that will be able to access up to $10,000 of their super before June 30 and a further $10,000 after June 30. Now, you can only access this if you are eligible to receive the $750 supplement payment, which means you're a welfare recipient, or if you are a sole trader or a casual and your income or your hours have dropped by greater than 20% as a result of coronavirus. You need to apply online through MyGov for this from April. Now those payments will come to you tax-free. They won't affect any other Centrelink or Veteran Affairs payments. So I want you to consider that this would be a measure of last resort, considering the decrease we've had in the share market and the subsequent decrease of superannuation balances. If you are pulling money out of your super fund now, you are crystallising losses and possibly impacting on what you need to consider before you do this is the years of compounding that it will have on your ultimate retirement balances. So I would suggest that you use all means that you can before you access your super early. Okay, one concession that will help our self-managed super fund retirees and anyone else that's accessing pensions through retail or industry funds is they have reduced the minimum drawdown percentage. Now, at the minute, if you were withdrawing 4% of your member balance in the form of a pension, if that was your minimum payment, that's now been reduced to 2%. So whatever percentage you're withdrawing, that has been halved, and that is effective from the 12th of March. If you need to speak to us about your self-managed super funds and how much your minimum now is, please get in touch. Another concession is the reduction in the Social Security deeming rate, now down to 2.25%. That came down a further 0.25 percentage points effective from 1 May. Okay, our state government has given us some support as well. And a lot of the form of that is on payroll tax changes. So we have an immediate deferral of payroll tax for business with payrolls. That's not turnover. Payrolls up to $10 million. So that would cover a lot of small businesses. So basically there is no payroll tax that's required to be paid for the 3 months to 30 June. So that means no payroll tax from 1 April to 30 June. We are waiting on a little bit of detail on that. Now, the second to that measure is the increase in the payroll tax threshold. Currently, it's $900,000. That was scheduled to increase to $950,000 on 1 July. They're now raising that to $1 million. So payroll tax will be again applicable from 1 July 2020, but we get a respite between April and June. So again, if you were to pay any bonuses to management, to your employees, to the directors of the business, they would be exempt from payroll tax if they are paid between a period of 1 April and 30 June. The state government has also announced that they will spend $750 million on capital works and maintenance of public assets. And they certainly are measures that we welcome, and they will help a number of our clients and businesses in our community to be doing the work for the government. Question time. Are you ready? So what I'm going to do now is I'm going to just close down this presentation, and we will move to your questions. So I will, if everyone can post your questions in the chat box. So if you look towards the bottom of your screen, there is a green share button, and next on the right-hand side of that is a chat box. If you want to post your questions in that chat box, that would be great. Now, I've got a couple of questions that were posted earlier. The first question, I'll read it out to you. I have a small business and my company pays my wage. This actually is a business that runs through a trust. I'm currently earning no money due to COVID-19. My company has some financial reserves. However, I'm inclined to stop paying myself so I can qualify for the new welfare payments. Is it legal to do this, or do I have to expend my business funds first? Now, I've got to say, we're not Centrelink experts. These certainly are questions that need to go to Centrelink, but generally, to be able to access the job seeker payment, you would need an employment separation certificate to prove that you are no longer employed by an organisation. You'll need to obviously speak to Centrelink, and I would suggest that that part of the paperwork that you will need to fill out will be information about your business and what sort of funding your business has available. So it may be difficult for you to access those government payments whilst you still have those business structures in place, but you do need to check that with Centrelink. Okay, second question for you. Can we advise whether salary payments and pay-as-you-go withholding go ahead as normal on the quarter's BASs? So your salary payments do need to proceed as normal. The only adjustment that we would have is if we wanted to bring forward any bonuses or make sure that our directors were receiving market salaries for the work that they do rather than reduced salaries. So as I mentioned, we will be in touch with you to let you know what can be done in that area. And I do encourage you to speak to us before you lodge that March BAS particularly, so that we can make sure that we have the numbers right on the BAS. Further question for you. What do we have to give our casual employees to allow them to claim their entitlement if their hours are reduced? That's a very good question. So that is where their hours have reduced by greater than 20%. I would suggest that a letter on company letterhead confirming that has happened would be appropriate to give them, so that they can then take that to Centrelink. The other way that they could prove that, for instance, is if they had a payment slip from before their hours were reduced, and then a payment slip after their hours were reduced as support. That would satisfy Centrelink as well. Good question. Another question. Current bank loan criteria prevents loan if the business has a tax payment plan in place. With the new ATO deferrals and plan will the new ATO deferrals and plan measures affect the government guaranteed loan application? So it's difficult for me to answer that, because this is going to come down to the credit policy of the bank. Now, we know that clients experience great difficulty getting loans approved by credit departments of banks when they have any outstanding ATO liabilities. I can only hope that they are supportive and that they follow the approach that the government has put in place and take these loans in the spirit that the government is intending them to be lended. So me, like everybody else, I can't guarantee that the banks are going to say to approve the loans with ATO payment plans in place, but all we can do is hope that they follow the spirit of the stimulus package that has been announced. Further question, if we already had a deferral date from the ATO for being in a fire-affected area, does the new deferral for 6 months start from the original due date or the new date? So the deferral starts from the due date. So I would suggest that that defers, that commences from your May 28 date rather than the earlier date that you had. It's portrayed to be from the due date of that lodgement. If your lodgement's now 28, it should be 6 months from that. Okay, I do encourage you to post questions. That's a few questions that have come through. I know many of you will have a lot more questions on what can be done. So some overall advice that we have been giving to clients at the minute is as for everybody, cash is king for now. We all need to be preserving our cash as much as possible. Have a look at the ATO is just about to issue out the quarterly personal tax instalments, your instalment activity statements. We need to be considering whether these should be paid or whether these should be varied. So before you pay those, speak to us as well, and we'll work out whether they should be paid and also whether we should be clawing back any of the instalments that were paid on the first 2 quarters of this year. So when you are looking at your business, cash is going to be tight for everybody at the minute, and we need to be speaking to your debtors, the people that owe you money, and if they are struggling with payments, see if you can get them on payment plans so that they are at least making part payments to you, so that the debtors aren't increasing beyond the level that they most likely will increase to. So we want our collections as tight as possible. You want to be careful with how you make your payments and who you make your payments to, and just again in the spirit of the current environment, I'm certainly encouraging clients to pay small businesses first and larger businesses second, because it's the small businesses that will be most heavily impacted by this constriction of cash. So pull in your debtors, be decisive with your creditors, and you need to then look at all business expenses and where you can be tightening the reins. Speaking to landlords about possible rent reductions. It's, what the hope is that the landlord will go to the bank to get an alteration of their loan, let's say from a principal and interest loan to an interest-only loan. They might apply for a deferral of the loan payments for 6 months. That's one of the concessions that the bank is allowing, that different banks are allowing. And then hopefully they will pass that on to tenants in the form of either reduced rent or a rent-free period. When you're talking to your banks about how you can be working with them, consider asking them also whether they can make a deferral on your hire purchase or your chattel mortgage payments. So if you're a business that has financed a number of your assets and you have large monthly payments, see whether they can make an abatement or an easement on those payments in addition to business loans. So the main principles there are consider a 6-month easement of non-payment of those loans at all. But just be mindful, what we don't know at the minute is if that will have any impact on future credit histories, and let's hope it doesn't, but consider a 6-month deferment. Consider taking loans from principal and interest back to interest only. If you have loans that you are paying above the minimum amount, consider taking those back to just paying the minimum amounts, and then talk to them about any other debt that you have and if you can defer payment or reduce payment on that debt. A couple more questions coming through. What do you think is a fair rental reduction request? So I've been talking to clients about 2 different scenarios. Another good question. So you could ask for, let's say, a 3 or a 6 month abatement, so 0 rent, and then you could increase the term of your lease by that amount. Now, landlords may not like receiving no rent, but they may also find it difficult to get another tenant. So I would be trying the 0 rent option first, and then if that is not getting any legs, then I would try a 50% rent reduction. So try the most and then pull it back as you need to. But just give something back to them, letting them know that you will extend the terms, that you'll extend the lease by the interest-free terms. Another question. And we have many clients that own their commercial properties and that pay their rent to their self-managed super funds. Now, previously the auditors and the ATO has taken a very dim view of associated parties not making these rent payments, and the associated party is obviously your business paying rent to your own super fund. So in these circumstances, what I suggest that you do, if your business can't make their rent payment to your self-managed super fund, then the tenant, your business, should write a letter to the super fund as the landlord stating that it can't pay the rent and that it's on either a 50% rent reduction or a rent hold for X amount of months. And then have the super fund write back to them acknowledging that that is the case and accepting that. So take it back to what you would do in an arm's length situation. You would contact your landlord, you would negotiate your rental change, and then they would approve it. So we just apply those same principles to our self-managed super funds. A similar question, can you stop making payment to your self-managed super fund for rent to keep cash in your operating business? So yes, you can, so long as your super fund approves that, which is going to be you, so of course it will. So just be mindful in your super fund that if you have a loan in place there, in your super fund, just make sure there is sufficient working capital within that super fund to keep those loan repayments happening. Now, I've not actually had anybody go back to the bank for any easement on those self-managed super fund loan repayments, so I can't give you any clarity on what the bank would say on that position. I have had clients go to the bank for 6-month deferrals on all loan repayments, and I had one client be granted that deferral. That was an ANZ Bank client, and all repayments are deferred for them for 6 months. So the banks are doing this. We just need to speak to them and ask. Okay, question. Does that still apply if the property isn't in a self-managed super fund yet and you are the owners of the property, or even if it's not in a super fund at all? So if you are, there's a lot of instances where you own the commercial property and it's rented to your business. Now, in some instances you have a lease in place for that, and in some instances you don't, as opposed to the self-managed super funds where you have to have a lease in place. So where you have a lease in place and it's between yourself, I would follow that same criteria where you write a letter or you document. You document somehow between the two different entities that own the property and that rent the property, that you document that you can't afford to pay the rent. This is what you propose, and the corresponding answer saying, yes, we agree to that. Now, if there is no lease in place, then it's a little bit difficult to refer to a legal document, but I would, in all instances, I would encourage the documentation of why the rent can't be paid, because if we get down the path of the ATO actually looking at tax returns and looking at the rental income that's included for tax returns, if they question why that rent has dropped, at least you then have some supportive paperwork dated back to now, noting why you couldn't make those rent payments. So let's do the paper trail, whether it's the super fund or whether it's not the super fund. Okay, again, if you can post any further questions, and then I can answer them for you. We have our full client team here looking at our clients, and as I mentioned, we'll be contacting our clients over the next couple of weeks on strategies that apply particularly to their circumstances. A question, do we know if lenders such as Bluestone are able to make loan payment easements such as the banks? Right, okay, so Bluestone, I haven't looked at that specifically, but I do have a client that has their finance through Liberty, so a non-major bank, and Liberty approached them directly. We're finding this with a lot of these lending organisations, both banks and second-tier lenders, that they are approaching people with loans directly, and suggesting that the people speak to them about the options that are available. So in all instances, it doesn't matter what level of lender that you are working with, you go to that lender and you ask what they have that can help your business through this situation. So, you know, if I can quote the Prime Minister, this is difficult for all of us. It is something that we will get through. What we look forward to is that the rebound is very strong. What we have to remember is all the people that couldn't book their holidays and couldn't spend their money and couldn't do all the things that they wanted to do. Once they are allowed to do these things again, we really should see a spike in the economy, and that will be a very welcome spike for all our businesses. So in the minute, the message is very much batten down the hatches, preserve your cash where you can, keep your people employed as long as possible. Actually, let's spend a minute or two on what we can do with our employees. So so the first thing that you would look at with your employees is if you can reduce their hours. So the message from the government is that it's important that we, as much as we can, we keep our people employed, so that when the business ramps up again, that we have our team in place ready to hit the ground running. One of the big mistakes made in the last recession was mass redundancies, and we then had businesses facing the issue that they couldn't deal with the rebound quickly enough because they didn't have the people on the ground. So think about reducing hours. Think about whether it's a day a week here, a shorter fortnight, whether it's actually a number of hours a week. So think about reducing hours. Think about half pays or reduced pays. Think about people going off on annual leave or long service leave. They still, of course, are a cost to your business, but it is keeping your employees with money coming in the door as well. So you just need to weigh up those numbers for your particular business. Just being mindful of our employees and caring about our employees at the moment, and giving them the safety and security as best we can. A couple more questions. Okay, if we're going to go down the bonus route, should we split between March FAS timeframe and after 1st of April for the individual to benefit from a tax perspective? Yeah, and that is certainly a very valid point. So if you're going to pay one of your employees or even yourself a performance bonus because they had worked really hard, and you were going to pay them $2,000, for instance, if you paid $1,000 in a pay run in March and then $1,000 in a pay run in June, that will certainly lower the amount of tax that is withheld from that bonus. Yeah, so a great idea to plan the timing of those payments. If you are stood down and the company closes during this period, are you entitled to your holiday pay and long service leave? Yes, you are. All employees are always entitled to their holiday pay and their long service leave. Now the government does, I haven't looked at this for a little while, but the government does have measures in place that do guarantee employee entitlements when businesses close. So come back to me on that. Again, I haven't looked at those details for a little while, but there are some measures there that the government does back these employee entitlements. It'll be interesting to see how that manifests in this current environment. Further question, we have a debt to an overseas company. Can they apply for bankruptcy, and do the local new rules apply? So absolutely the local rules apply because your business is governed by the Australian rules, not the overseas rules. So look at that 6-month government protection that has been put in place. Any suggestions in regards to keep paying staff if we go into a lockdown? Sullivan Dewing, we are a business just like you guys are businesses, and we had a meeting with our team first thing Monday morning this week, and the instructions that we gave out to our team were that if you are ill and you're at home, then we will pay you under your sick leave allowances. Of course, if you are looking after sick family members, that also comes under your sick leave allowances. If you are at home in isolation by choice, then that comes out of your annual leave. If you are working from home under a lockdown situation, then we pay you as we normally pay you. So again, if we are, it depends on the longevity of this set of circumstances. We may then need to look at three-quarter pay measures, half pay measures, some sort of payment measures, but just because we're in a lockdown, people will still be working from home in these lockdown periods, and the wages payments still need to be made. Some very good questions coming. Okay, how to keep people employed is my biggest question. Happy that we've covered that, thank you. If employees are covered by an award, are we legally able to pay them half that award due to COVID-19? Also, can we pay annual leave on half pay to reduce the cost to the businesses if we ask them to take annual leave? So let me answer the second part of that question first. Yes, you can put them on half annual leave. You might even decide that they're on half annual leave and half pay. There's really any sort of flexibility that you want to put in place. I'm sure that it's not going to be an issue in this environment. I would encourage you to speak to your HR experts. 9 to 3 Employment Solutions, Catherine McMillan, based in Sutherland. She is very across all these rules. EmploySure is another organisation. There's many HR organisations out there, and they will have the specific details on what you can and can't do for your employees. I've seen a lot coming through on emails from these organisations as well. You might have received some yourself. But I think the utmost criteria at the minute is that we do all that we can to continue to make payments to our employees in whatever shape or form that takes. The first part of the question, what to do with the award? I would, in all honesty, you need to go back to Fair Work on that and your HR people. That's not a question that I can answer with any clarity. I apologise for that. We have some other links that we'll send to you after this webinar that can help answer some of these questions too. So I believe we've emailed you the PowerPoint presentation this morning. So this webinar has been recorded, and if you would like a copy of that recording, just let us know. Being our first webinar, we capped our number, which our inquiries far exceeded that. So this recording will go out to many, many more people after today. Sorry, another question. Okay, can you salary sacrifice? I will be closing questions in about 10 minutes, so if you do want to ask a question, please do so now. Can you salary sacrifice 10K into your super fund and pull it out straight away if you are 45 years old? What will be the tax implications? You can't pull any super out unless you are a sole trader who has reduced their income by greater than 20%, or a casual employee who has reduced their hours by greater than 20%, or unless you are a Centrelink recipient. So if you are a business owner that is employed by your business, then you won't be able to access that 10K super. Now, so I would suggest it would be very difficult for the sole trader or the casual employee with the reduced income to make that payment into super to then pull it out. And almost the really disappointing part of this concession is that it's often the sole traders that have not made super contributions over the year and have lower superannuation balances, and to enable just this group to access their super is going to be a little bit challenging for them in the future, considering their super balances are already usually quite low. The age rule to withdrawing super doesn't apply to this early access. Just to be aware, the 10K is interesting that they've chosen this amount. The hardship provisions that already cover superannuation does enable a withdrawal of $10,000 from super, wherever your super is, if you can satisfy the superannuation fund's hardship measures. So they've obviously aligned to this early access to that and tried to extend it a little bit. They have said that this super withdrawal is tax-free. Okay, thank you for your thank yous. That's lovely. Further question? Very good question. Would now be a good time to buy shares within a self-managed super fund? Well, Given that we have a limited financial services licence here at Sullivan Dewing and we can advise on super, we are not able to advise on what you can and can't invest in through your super fund, other than to advise you on the tax implications of those investments. So what you need to take into account is you need to look at the share market, you need to speak to a stockbroker, and ask those questions there. So if you have a self-managed super fund that has an amount of available cash, then we have a great contact at a stockbroking firm in the city, Andrew Tyrrell from Shaw Partners. And if you want me to pass that contact on to you, I will of course do that. I would always encourage people to look for opportunities where you can. I haven't been paying myself for a few months. Can I pay myself a few months' wages in March? Absolutely you can. So all you are doing is catching up the wages that you have earned in the past months that you have not yet paid. So absolutely you can make a catch-up wages payment in March. How are we all feeling? I'm hoping I've answered many of your questions today, and I'm hoping you feel a little bit better now that you have some clarity of information. Thank you for your lovely messages that are coming through. We appreciate your support. You know at Sullivan Dewing that things come from the heart for us. We've known many of you for a long time. We work very closely with many of you. We are absolutely helping you as much as we possibly can, and we will make sure that you access these concessions to our best, to the highest levels that we possibly can. I've got a light-hearted question. That's what we like, a bit of humour at the time. I did say to my team here in the office, so I did say, please send round some jokes. Please keep us all laughing. Given how incredibly stressful this current situation is, does wine become a legitimate tax deduction? I wish it did, but no, it doesn't. But at least the bottle shops are still open, and I did hear that they were doing home deliveries. Some of the pubs and clubs are doing home deliveries of beer and cocktails, something we might be needing in the near future. It's quite interesting. So Australia was going crazy buying chocolate and wine, and America was going crazy buying drugs and guns. A couple more things coming through. Okay, thanking you for the thank yous. That's all good. I am hoping that you do feel a little bit less overwhelmed. But as I say, the information is out there. This is not the best stimulus package that we could have received, given it's a tax credit, not a cash injection, but we will take whatever we can get. All right, so I'm going to wrap it up there. Thank you very much for attending. You're our first little webinar, and that will make you special people forever. Thank you. Enjoy your day. Come to us if you need anything at all. Bye now.